Hello, everybody, and welcome to today's episode of Trade the Chain. Thank you for joining me. I am here with Doug, the Everyday Man DeRosa, and Trade the Chain's Director of Research and Chief Community Officer, Nick Mancini. As most of you have experienced and are still experienced, we've been heading into some really volatile markets over the last day and a half now as we go into earnings seasons. Tomorrow's the FOMC meeting. But we're going to break it down for you and go through the charts as well as, share what we've been doing as far as getting alpha in these turns. The three of us were trading into the night last night, had some on the overnight, and we're active before the market opened this morning. So we'll tell you what we're doing and tell you how to prepare for what's coming on the second half of the week. Before we jump into that, let's just go real quickly to the market. Total market cap is down under $1 trillion again. I think that'll be the third or fourth time in the last trailing 7 days we've showed that. Bitcoin price about 20,935 with a neutral sentiment slightly bearish. And the overall sentiment 55 out of 100 neutral on the overall market. Here's what the top coin lists look like. Everybody is about neutral, actually, in the short term, about even to where it's been for the last hour or so. But we have had major price action movements downward. And we're going to get to that right now with Nick Mancini.
Very quick there. So we're looking at Bitcoin right now. So we were floating in this trend. And I think I mentioned in the TTC community that it was getting a little bit elongated for a bear flag. I know many, anything above this 200 moving average on the daily, I think a lot of people were like, hey, or I said bear flag, I meant bull flag. Hey, bull flag, we've got this bounce here, pull up RSI, hoping for some bullish divergence there, and it just didn't play out. We obviously hit the top of the trend and went back down. So moral of the story is, we're below the trend. And we know that when we're below the trend, when we're below this POC, typically price wants to try and tag it, take it back over. But it's more likely than not that we end up getting pushed back down, at least in the short term. Volume is increasing, but we're seeing a lot of sell volume. And right now, a lot of this volume, in my opinion, and from what we can see on the ticker tape, is it's a lot of perps. And perps means perpetuals. So futures typically, so synthetics, not the actual asset, more or less betting on the underlying asset is very much, probably just a good way to consider this. So people are betting on the underlying asset much more than they're betting on the actual asset. And just to zoom out, every time this has happened, price goes down. Not every time, but nearly every time. And so, and perps clearly let us down, and that's why we had such volatility. And then perps and spot caught up, and then we obviously had a further move down, showing further weakness. But we're in this same kind of pattern again, and it's not giving me a lot of confidence, especially the fact that we're under 21, and the POC is just under 21.1. So I'm not surprised that we're volatile in this range, especially with the S&P 500 kind of doing similar. But we've been using this as a fantastic weather vane, and our weather vane is predicting bad weather ahead. We're underneath. This was the 4K tap. This is where a lot of zealousness occurred, where even myself and Alex got caught up thinking that we may see 4,100, potentially higher, but clearly that's not the case. We've been rejected. It's not entirely a firm rejection, but we are beneath the trend, and we're now hovering at where you would pray support is. But I don't know if this is the market to be praying in, especially with these guys reporting today. We have some other importance, tomorrow, not very, but then we have, Meta and Qualcomm and Ford, which will be interesting. And then, of course, after the close tomorrow, we have FOMC. We have a likely 75-point basis hike, along with a J-POW conference where we'll get guidance moving forward. And remember, we don't have an FOMC in August, which is very important. So whatever we get tomorrow will be more or less what we have to deal with for 8 weeks. Of course, Fed governors will speak and whisper and talk to the markets after tomorrow, as they typically do, but we won't have any firm policy ideas or opinions from JPOW after tomorrow because they're very intelligent. I mean, we could get another Wall Street Journal report about whatever the heck's going on, but we have to be cognizant that there's likely going to be an information gap over the next 4 to 8 weeks. And when there's a gap and there's uncertainty and there's negative price action, it's tough to bet on a reversal in that time frame, especially with earnings looking the way that they do. So the last week they were a little bit positive, but now we're looking at tech and consumer discretionary, and with Walmart predicting what it did and taking other stocks and consumer discretionary with it, it doesn't bode well for tech, especially in a high interest rate environment. Tech never does well in a higher interest rate environment because it's tough to look for future earnings when it's tougher to make money. When it looks like it's tougher to make money, no one's going to bet on you making money when you're literally telling people, hey, it's going to be tough to make money. So that's kind of how this narrative goes. So ETH under its POC, where you would want to try and long, of course, but with these trading levels, the fact that we didn't trade within them makes it very easy to slice down. So if 3050, 3060 breaks, I mean, 1280 is the most reasonable target for Ethereum, and 1200 is that next POC. So there's a large gap here in Ethereum if it breaks down. Just looking at this candle formation, I mean, Alex, you've been doing this thing for a long time. I don't know if there's many assets that you want to buy when they look like this.
Not particularly. I mean, it's been nothing but bearish patterns, both on the short term and the long term charts, as far as I would say the last 12 hours specifically.
Yeah. So I'm a pattern watcher. I mean, in past history does not influence or indicate, future results, as we all know, but we do look for patterns in trading. History does like to repeat itself. And there's a couple things that I just want to point out to everybody. We talked about this yesterday. So there's a few tricks up my sleeve for potential reversals. When an RSI trend breaks like that is typically when the uptrends or when the trend reverses. We've got this kick in right here. So that's something to be cognizant of. Doesn't mean that RSI can't go extremely oversold. We've seen it plenty of times, most recently during that previous ETH dip. So I think bulls definitely want to see this come out of here. I mean, it's always plausible. So we'll be looking for that for a potential reversal, for a potential trend change. But we don't have any bullish divergence or anything like that that really inspires me at this level. And I have a feeling that RSI may get crushed back. And also, we've been having about one extreme move about every 12 hours. So, 18, you see the 1800 number there, 1800 number here. Look at that. 1800 number here. I mean, it's literally, it's actually quite fascinating when you look at it. 1800 number here, and then it gets a little bit more volatile, but we've been doing this about one time a day. And I have a feeling, and it's Asia recently, obviously, you're looking at that 6 p.m. my time, 8 p.m. Eastern, which would be 8 a.m. Asian time. So, it's very interesting that does seem like the US wants to buy and save, and Asia and Europe really want to punish and continue offloading. And so I think that's another interesting thing as well. If you're trying to time these moves, it's happening about every 12 to 18 hours for a large move in one direction. And I would continue to look for that. Now, it doesn't exactly help you with directionality, but it does help you with trade ideas, because if you're getting extreme moves about every 12 to 18 hours, well, we're coming up on that time frame pretty soon here.
Why don't you zoom into the Bitcoin chart, and for our evening, overnight, and morning trade, go through for the folks what we did and what some of our rationale was behind it.
Sure thing. So probably the easiest way, let's zoom in a little bit. So what's the best way to describe this? So there's many ways to kind of teach this, but this is an interesting one, and it's called deviation, trend deviation. So here's your range. Here's your breakout, long. Everybody gets euphoric. Same thing here. Short. Everybody wants to destroy this. This is called trend deviation. So Alex and I both saw this happen. I mean, I'm not gonna lie. I, made me wet my pants a little bit when you see action like this. It's not entirely confidence inducing. But of course, this was towards, the later day yesterday. Alex and I decided to start scalping short here. It became a little bit difficult to, 100% play the trend. But I think we held a little bit and began to close, into late evening, as this was about 6 p.m. my time. So as we're starting to close down the day, it's like, hey, we're not going to go really lower. Alex and I were debating shorts and longs here. I made a little bit of a scalp right here on the 1 minutes, but typically what's happening in these ranges is it's trend deviation. So we are, thinking that we are in a bearish movement. So the fact that we just came down here and went under the trend, that was obviously a big deal. And then we came up here and we basically tapped the trend at about 8 a.m. And then we had these tweezers, and I'll try to zoom in a little bit more because I'm sure it's not the most defined thing. But we basically had a mini swing failure pattern, not a full tweezer, but a mini swing failure pattern into the trend, and then right back to the POC. That to me signaled, 3 times it's rejected. No bueno. And I believe Alex messaged me this morning and asked for my thoughts. And I think he took the trade a little bit earlier than I did. But considering that this was, we broke under the trend, tapped the trend, rejected, try to tap the trend, rejected, break above the 50 MA, rejected. That to me, easy short signal. And then this POC, this 21K number, is now acting as resistance with confluence with the trend. So from a technical perspective, this is what you're looking for. This little magic circle right here, fantastic short opportunity if you can get it. A lot of people obviously did here. And then you look at the fundamentals and you say, well, earnings look to be bad. We've got FOMC tomorrow. Why would I be risk on? And of course, if you're shorting, you are risk on. But in terms of capital movements, if assets are being bought, it's going to move higher. Nobody's going to really buy in this zone expecting what we are this week, which is potentially bad earnings, FOMC hike with potentially poor guidance, moving into a gap, a data gap. So basically what you're seeing, and the easiest thing here is look at the daily volume on S&P from the peak. It's literally been decreasing every single day, every single session, and that's because people are literally risking off. They don't want the smoke, as the cool kids say, because there's too much risk. So it's better to short into this weakness, wait for the news to come, and then play the volatility afterwards. And that's really what we've been doing, for our entire trade thesis, or for our multi-day trade thesis.
Hey, Nick, yesterday we had about an 8% move down. I guess it wasn't BTC, no major news. And you mentioned volume. Can we kind of glean who is selling? Those who have had to sell had sold already. So this isn't for selling. Is it a lot of retail volume, or are these some family offices? Like, what are you seeing in terms of the quality of the volume, so to speak?
So let's go ahead and zoom out here and look at perps. So look at what happened yesterday, Doug. Spot. Everything was more or less in tandem. And then we had a big spot seller just decide to just dip out of the market yesterday. And that was across, I know we're just looking at kind of delta here. And actually, I can probably zoom out here a little bit. We can see nearly everybody systematically sold off at once. FTX had major sells, Binance, and then perps as well. So it's interesting that, perps are trying to save this level. And that's why I keep saying it's probably not going to live, because until spot picks up, why is price going to move? Perps don't move the market. It's synthetic. So whenever you buy perps, you have to obviously have something, in spot, and you're buying and selling. And, I'm not going to get into the confusing nature of how it's all related, but basically spot going down means someone is literally selling off assets. Perp going up means someone's betting on the movement of those assets. So what I want to bet on is the real underlying asset, rather than what traders think the asset will do eventually. And so we're seeing a continued spot sell-off. And that is what is really keeping us down. I don't really have a great answer for you as to why someone picked then. But again, think about the context. Yesterday was Monday. We're heading into probably one of the more volatile weeks we've experienced in this bear market. And someone decided, I don't want the smoke. And that's exactly what happens. They risked off so that they wouldn't have to deal with whatever potentially came. And the market is obviously following those spot actions.
So, good question from Crypto Man in the chats here. We have the FOMC minutes coming out tomorrow, and we know what happened last time. Right, there was irrational market movements are an everyday thing now. What are we suspecting now with earnings coming out tomorrow as well from a whole Wednesday host of companies, as well as mixed in with the minutes? Any thought process into, hey, let's say they rip us with 75 basis point hike. If they do 100, I'm not so sure, but let's say 75 basis point hike, and we get some missed EPSs tomorrow. What can we expect from, let's say, a rational standpoint, and then we can go to an irrational answer after that?
So I'm trying to pull up exactly. I actually had a discussion with a trader about this, and he was like, I forget what the argument was, but I'm going back to June's. So this was FOMC, yeah. So we dumped on FOMC, of course, yeah. So we pretty much dumped every single FOMC because they happened late in the month. So pump. We actually pumped on this one, and then we dumped on this one. I'm sorry, this one. So again, we mentioned this yesterday. If this was independent, if it was just FOMC this week, I would say that it's buy the rumor, sell the news. Meaning we know what we're going to get, buy up, tank down. The fact that we're moving lower heading into FOMC tomorrow is very unlike what we've seen prior to the market. So my original thesis is more or less moot because no one's buying the rumor. They're selling it apparently. And I don't know how to weigh the significance of the FOMC in comparison to both GDP and earnings. It's something that I've been kind of weighing back and forth in my head, and just the whole lot of it seems bearish, in my opinion. Even though the GDP numbers or even though the GDP concept is being fudged to make it seem like we're not really in a recession, it's like I just have to wonder, with rents sky high, with the dollar in full heel. And housing is not really crushed. Wages are still going up. Unemployment's still extremely low. I'm just like, the Fed really hasn't done anything, and people haven't really eased up on spending. And all of these companies are telling you that it's coming. So I'm like, regardless of whatever the FOMC does, like we've known that for quite some time. We've been able to price that in. I don't think that the FOMC number matters as much as the guidance will, considering we've been certain as to what the FOMC is going to do for more than a week, right? So it's not really a good answer, but it's just, to me, the significance of the FOMC number is waning. It's going to be the FOMC guidance that really gives us the wackiness that we should expect.
Agreed. And I've been definitely transparent in the moves that I've been making in the Discord channel as well. So on the open and closes. So any of you Trade the Chain guys can follow us along in there. But
I probably won't play a trade at FOMC meeting. I'll probably try to catch something afterwards. Like I really don't know what his words are going to be. No, I would expect bearishness because he should say that things look bad, but look at the White House. They're literally telling us lies to our face.
Well, the classic is just look at Netflix EPS reports the other day. I mean, they missed a million. They lost 1 million customers instead of 2 million, and the stock shot right up on that because everybody was so happy that they lost fewer customers than expected. So I don't know.
Like if Walmart, who serves literally the backbone of the U.S. economy, is telling you that people are buying food over clothes, not in a good situation. And it doesn't seem like we're going to be in one anytime soon based on their guidance.
You know who didn't miss today? McDonald's. Let me tell you something. McDonald's can never miss. McDonald's is like God's gift to the world and my belly.
Well, you've been doing that breakfast burrito pretty consistent now, so I think that helps a lot.
And you know what happens when we're in a recession? The only food any of us can afford is McDonald's. So,
I bet ramen noodles are probably printing right now.
I would just add too, Alex, to Nick's point about things that just aren't making sense. GM came out with their numbers today. The median price, the average price of a GM vehicle is $50,000. To me, ridiculous. Like I drive a Buick Cascada. Don't make fun of me, viewers. It's fun. It's a cool car. It's convertible. And I had a Saab before that, which I guess was GM owned. So I guess I'm GM person. Like, what do you have in the GM catalog? You have Lincoln and Caddy at the top end. What else is there to make that 50,000? Like, to me, that's, again, as being the guy on the street, that's not sustainable, right? Forgetting about $600,000 townhouse.
Doesn't GM make like don't they do they make a lot of motors beyond cars and stuff too? Don't they do? No, that's GE. GE makes like,
but the average GM car being 50 grand, like that just
let me put that in perspective real quick. 20 plus years ago now, I bought a Ferrari 308 GTSI, beautiful red sexy car, because I love Magnum PI so much, for $50,000 with 8,000 miles on it. I don't know. Yeah. It's, people are beginning not to be able to, afford cars. I don't know if anybody saw that Austin made the rent roll increase championship this year, 10x in rent increase over the last year, the highest in any other city in the country. And then, we have an impending credit crunch that's about to come about with automobile loans. And guess what? You talk about higher price automobiles. Well, it's squeezing consumers into these unrealistic monthly payments, along with increased housing costs and whatnot. So it's not a good time. That being said, as well, here we go. We have Coinbase shares tumbled today, wow. 15%. The stock has lost more than 77% of its value this year. This is coming on a report that the S.E.C is investigating, charges that they're listing securities, more or less. And this is also coming right after a product manager was charged with insider trading over at Coinbase, which in itself set a precedence as the first case of that nature. They're saying that this is separate from that case, but I really find it hard to believe. I mean, I think their investigation into that product manager doing insider trading is what led to them identifying these securities. And they so much as came out and said that when they were doing the press release on the insider trading charges, that 7 of the securities that were listed in wallets from this gentleman, his brother and friend, were to them considered securities. So where are we going with this? Doug, I want to, Doug and Nick, and anybody in the comment section, I really want to get opinions on where this is going to happen. Coinbase came out the other day and said, their chief legal counsel said, listen, our reviews for listings on whether they're based as securities or not was and is reviewed by the S.E.C. So I'm feeling confused.
Well, I'll say this, like in terms, again, just being the person on the street, this is why people don't think they have a fair edge in the stock market, because this was a high-flying IPO, right? So again, people on the inside are dumping that day when it goes live, unless they'd had a lockup or something. And it's the retail guy who's buying in thinking, and again, partly their fault, right? They're speculating or whatever, but what's the high on that? 434, I think, or something like that. I mean, absolute wealth destruction in that, right? So again, tying in just, you have what it's doing to the crypto space, as it's the biggest high profile name of any exchange outside of Binance, but at least this is publicly traded, right? But just total destruction in people that have purchased that. And now you've got a lot of lack of confidence, right, in what they're doing internally. We'll talk about some other exchanges, obviously, going forward in this piece today. But yeah, that's just people right there. It's like, why do I even buy something that's IPO that day, right? I'm going to get crushed in it.
I agree. I just want to point out to the viewers, in the year to date, $251 to 54 cents. I bought it IPO. I believe I was 4 something at the time. Sold at a loss. It was ridiculous. Also, another thing, one of my strategies that I thought about doing was after Coinbase earnings, if they puked on them, I was going to look to buy December calls. But that is now out the table because of insider trading charges and security listing issues. So, Nick, what do you got?
I have been a Coinbase hater for many years. I think that they run their company poorly. I despise their leadership methodologies and actions. Clearly, their operational abilities are horrible. If you're so foolish to somehow muck up an SEC relationship that other incumbents have shown an ability to formulate in some degree, it's your own fault. I mean, I understand that the story is we talked to the SEC and we had a mutual agreement. Clearly, SEC feels that Coinbase didn't do that. The SEC doesn't wake up one day and goes, I'm going to screw these guys. I mean, some people feel that they do. You have to legitimately invite them into doing something stupid via your actions. And I think Coinbase has been a giant target because they are, and I'm sorry to say this, they are a stupid company. They have poor leadership. They approach things poorly. They're always in the doghouse. Retail hates them. And they're mismanaging their company from both operational, marketing, and a leadership perspective, which to me are the big three buckets that you need. So I'm not an SEC fan. I don't think that the SEC should be probing them and charging them for an agreement that was made. But the SEC does not just go back on agreements. And if that was in writing in any degree, the SEC will get screwed in court. So I have a feeling that someone's not giving us the full story. Coinbase clearly was not strong enough in terms of being able to manage their personnel. And they've invited the dog into their house, or the bear in this case, if you want to consider, do the Goldilocks and Three Bears story. But tell us how you really feel. I'm sorry. I've hated this company since day one, since I had poor user experience with them, and everything that they get, they deserve, because there's other companies that don't have the same ire of their enemies or their regulators. It's just just
looking at it now too, Nick, like Voyager's down, right? Like this is their opportunity to take share, and they're not doing that because, like, to your point, they're screwing up. They're tripping on their own feet, right? So that just shows you basic business 101. If you can't take advantage of a competitor bleeding, then you're an idiot, right?
I'm not an FTX fan. I'm not a Binance fan. I'm just anti Coinbase. I just forever they have irked me in the wrong way, and I think they deserve everything they get.
The one thing that I take from this case, it's been really prevalent for the last bit of time here, is exactly what I feel the SEC, and everybody should feel this way, the SEC shouldn't do, and that is regulation by enforcement. Regulation by enforcement has come up numerous times, both on the Hill with other, political members and officials, and this is a really bad thing that keeps happening over and over. You cannot regulate through enforcement. Also side note that the SEC, their 100% of their operating budget is funded by enforcement fines. So just a nugget there. I'm not saying anything about the SEC, but I mean, that's almost like running a BitConnect scheme.
The SEC has also been getting slapped around by Ripple in that case. So I would assume that they're looking for alternative ways to pipe that methodology that you just said. Because I think their hope was that, hey, we're going to crush XRP and we're just going to set this precedent. We're going to shove that down everybody's throat. The SEC is kind of playing them a fool. So I think they're another way to look at this is they're really looking for any sort of window into driving a wedge that they can then kind of beat in and then set some precedent and move forward. And it's a conspiracy theory, but it's not too far off.
Listen, Phoenix in the chat, I agree with you. I'm not so much that teaching blockchain at MIT makes you understand what a security is or not, two different things. But if there is a consensus through their process that dictates it is a security, then so be it. The one thing we don't want is blanket regulation. And unfortunately, I think it's going to come down hard and strong that way because of all the screw ups that have been happening this year. And that's a piss poor shame right there, because we needed to have the leaders in this space, the people who came in early, set the precedent for how that shift and shape of regulation was going to be. And now it's just going to be a big damn heavy winter quilt thrown down, and we're all going to get fucked. But that being said, let's move. I'm just angry because things like that and things like this. We had FTX make an offer to Voyager the other day. That was sent out publicly as well by SBF over at FTX. A lot of people have mixed feelings. I really want to hear everybody's side to this, because in this offer, which is up on the screen, their formal one, they're calling for liquidity of customer accounts with a snapshot of July 5th. Now, depending on what day and where the market is, that could be up or down for you. So, listen, if anybody was to take that deal, let's take it at dead bottom. But I'm curious on why there's a lot of rejection for it, and I'm also curious on why other people are praising it, because Voyager's original, restructuring, going concern proposal was where you're going to get your cash back, you're going to get a certain percentage of your cryptos back, and there's going to be some sort of mix of equity ownership and moving forward with the new entity. And sure, that's an uphill battle. All these scenarios are going to be uphill battles, and they're not all going to be good. I guess what it comes down to is, hey, how much of a haircut am I going to take on my crypto? Right? Is what FTX proposing going to be 50%? Is what Voyager's proposing going to be 70%? So forth and so on. And of course, there's a whole bunch of other counterparties we haven't even heard from yet that have been supposedly putting in bids. Shortly after this was filed, Voyager came back and denounced the offer, as I suspected they would. As I suspected, they had kind of the same mindset as I did, where a lot of this had to do with publicity. And I've spoken about it before. I think it's a great play that Sam did coming out of the gates when there was the first sign of trouble, and it's worked well for him in customer acquisition. I see it all over crypto Twitter. Voyager customers who have switched to FTX and are now trading, and so that cost of acquisition has been pretty low for him. Where do we go from here? I don't know. Sam came out very unlike him too. Came out with a long Twitter thread, and
Unlike him.
What's this? Well, he doesn't.
He loves his threads.
He loves his threads, but he doesn't. This was a little contentious for Sam.
It was.
You know what I'm saying? And so when I saw it, I was like, "Whoa, holy cow! Somebody hacked his account." But he's basically coming out and saying, "Hey guys, why the F aren't you going to take this? I'm the hero of the day." So Doug, Nick, let's discuss this for a little bit. I'm going to go through the chats right now, see what everybody's putting down, because I want to hear what everybody has to say about this.
So I have a few questions first, and I think you're probably a better person to ask, both as someone who has a stake in the game and someone who's knowledgeable of these types of discussions and agreements. So basically, at the end of the day, FTX wanted to absorb all of Voyager's assets, but not their liabilities, correct? That's basically, I mean, if you had to put it to a 1 and 0, we want all your assets, not your liabilities, right?
Yeah.
Yeah. And so that would, if that deal went through, then VGX would be worthless, but customers would be able to reclaim a vast majority of their assets that were not in VGX. Is that correct, or am I on the right track?
Correct.
Yeah. So in this scenario, so I'm glad both of those are cleared up, because I think those are probably two of the biggest questions. Is VGX worth this, which I know a lot of Voyager customers had, in their wallets, and then B, do they get a vast majority of their money back? So there's the give and take. Is do you want liquidity now, or would you rather take the risk of a potential Mt. Gox scenario with getting a percentage of your money later, with VGX still potentially not being worth anything significant? And I think that's a very difficult thing to ask retail. And fortunately and unfortunately, I'm not affected, so I don't have skin in the game, but I'm very curious to kind of ask people how they feel. because I do know that people are both in need of cash given the macroeconomic situation, but people also want to retain value that they've accrued.
Well, absolutely. I think it's a vulture opportunistic situation, right? It's like, hey, Nick, I will give you 50 cents for the dollar you gave me before now, or I'll give you possibly 70 cents if you just hang on for a couple months. I'll give you 70 cents back, right? And if you can't pay your bills now, you're going to want the 50 cents pretty quick, and it's going to be a huge loss to you. You know, the a couple things. I mean, it's so emotional to talk about this, and I do want to point out that Obi-Wan Kenobi in the chats right here is such a terrific guy. If you see him in the spaces, you know, he's a really good, smart, coherent speaker of you know, pretty much facts and breaking it down. I
mean, for this, like, I mean, it's literally, yeah. How do you want to look at it? Do you need the liquidity now? Would you rather be patient and take the risk for potentially a higher sum down the road? And that's basically, it's either, you know, let's call it, you know, half a part now, or maybe a full part later, or somewhere in between.
We haven't seen the other bids either, so we don't know what's out there.
What's interesting to me too is that he was viewed as a savior just 2 weeks removed, right? And now he's somewhat vilified by people, right? And so you look at the language that Voyager uses, a publicity stunt. If you're in the FTX camp, on the FTX board, FTX investor, you're like, well, this is a savvy business move, right? If we could buy 50 cents on the dollar, that's a great business move, right? You know? So I think it also is too, if you're a Voyager client, right? Everybody has pain if you're a Voyager guy. I get that. I'm not minimizing that. But if you can get, you know, the current value of money, like Nick says, right? Get it in your account. If BTC does puke down to 15, you know, do you have confidence in your ability to equity and get back to par or some level that'll make you happy, right? The markets may give you that, right? So that's the option, right? Do you have that? But again, if you have part of what you own is the VGX token, well, then that goes by the wayside, right? So if you have just pure crypto and some cash, you probably might want that deal, to be honest, because you're like, wow, I have confidence in my ability to trade. I think I can get my money back. If you have crypto and VGX, well, then you're like, I don't want this because it basically makes VGX worthless, right? But it is interesting because Sam is now, he was the face of the company, but now you have to look at him like, is he the face of the company, right? Is this an FTX move or is this a Sam move? And that will kind of almost decide his fate really in this space.
I mean, I think it's one and the same. It's vulturistic opportunity for him. I don't fault him for coming out swinging like this. I mean, anybody would do that who's savvy in business. You know, a couple of things is, one, you know, nobody here, no customers are losing 100%. Okay, I hear 100%. Nobody's losing 100% of their assets of Voyager. Okay, that's for sure. Two is it's going to be a timing thing, right? There's people in different positions in life, and their timing ability of when they need stuff is going to be different. Okay. You know, I'm greatly affected by this, but if the decision isn't reached tomorrow or the next week, I'm okay. That's fine. You know, a lot of talk about you know, the lawyer spends, you know, particularly in to Kirkland Nellis, whose recent bill was $3 million. There's a, you know, last calculation, Voyager had 140 million of their own cash. That's not being spent out of depositor funds. And no, you don't get that to make up the whole unless there's a full out liquidation. So there's no money being lost from the bills so far. And also there is no reason for Kirkland Nellis to want to unjustly enrich themselves through this process. The actual brand marketing from them becoming a leader in crypto restructuring and bankruptcy as a law firm through the whole industry is way more powerful and will drive in way more money than them trying to bilk a company on a restructuring process. Trust me on that, because there will be more failures in this industry, and they will, if they play their hand right and do a good job by Voyager and Celsius become the leaders in that space. So it's just emotional.
I mean, silver lining, nobody's approaching Celsius for anything positive. So the fact that Voyager is decently strong enough to be fielding offers, I think, no matter how you feel about FTX or the deal, is a step in the right direction, just in comparison to other people in your scenario. Like at least someone is willing to step in and potentially, speed up the route to redemption, no matter what that redemption looks like, because it's not happening for other companies.
No, I agree with you. Hey, great question here from Phoenix. About the VGX token. Is it worthless? Right now it's in limbo because the VGX token is going to plug into 99% of these acquisition offers or scenarios very poorly. Okay. Nobody VGX. Is it a great token for utility in its own native platform? Absolutely. Is it going to function well with other platforms? No. And we already know that there's some traditional banks that are making some bids. What the hell are they going to do with the token? The actual value, and there's 100 million locked up in this token. My numbers may be wrong, but listen, there's about $100 million locked up in this token. The restructuring plan of Voyager pulling out in its own entity, forget brand trust or not, pulling out in its own entity is really one of the few ways that the VGX value stays locked or has any chance of moving forward. That's $100 million. If you take any other scenario, you're wiping away $100 million in value right off the rip right there. That's a hole in itself that everybody needs to also be concerned about.
Yeah, I mean, it's
so hard for us.
I've heard differing opinions just from the deal from many people. I know some people that are executives at other companies were like, this is a deal that, leadership should take. No matter whether you're a customer or not, thinking from a company operational perspective. I've heard people, feel the same as retail and say it's a low ball, crap bid. But I think at the end of the day, if FTX is coming knocking, I mean, they obviously have the most liquidity and probably, skin in the game to absorb this. Plus they have a relationship, but obviously they denied the bid. So now we will have to see if there's either a counter or someone else coming. And I think, the most difficult part about this scenario is when you feel confident in saying no, you're really hoping that either you can fix the scenario yourself or someone else comes along with a better offer. And that's the risk that you have to take. So saying no means that this process will be much more elongated and drawn out. And there's no guarantee that there's anything anything is going to happen soon or quickly. So it's important to consider all angles, because I try to take a very neutral stance in here and just play the middleman. But I personally, if I was affected, I would prefer the route that gets me my assets quicker.
Agreed.
In the fact that over the next 6 months, we are likely entering a non-friendly environment to value creation. That's the only reason to look at it. Asked me 6 months ago, I would have said I can wait. Now, I would not be able to wait if I was in this scenario. I'll be honest with you. So
no, I agree. I completely agree. A couple of things, out of the chats, VLP and VGX have value if the buyer keeps the platform. That's absolutely correct. They do. And that keeps it going. As of right now, all we know about is one possibility, which is self-restructuring program. If I assume that would also be true if it was with a TradFi institution for a bolt-on, but I'm not sure that a TradFi institution would want the VLP mixed up within their traditional finance banking platform. Outside of that, I can only see it happening with an independent group that wants to become exchange operators. I don't see it happening with a bolt-on at all. Crypto Man, I'm biased, but the Voyager app was way better than FTX. There's got to be some value there. 100% agree with the first part. The second part, I don't agree with. Listen, I had to go dust off my Coinbase app when this all happened, which I hadn't used since 2016, 2017 for fiat off ramps. Let me tell you something. I looked at that thing like it was my first time looking at a cell phone. It was ridiculous. I couldn't find my way around that app if my life depended. It took me about a day to find how things. I called up Doug. I said, Doug, if anybody knows Everyman Doug, he's the least technological savvy person in all of the world. And I was calling. I've been in crypto for so long. I was calling him up on how to use Coinbase's app.
That's sad but true, actually. Yeah.
That being said, the whole appeal of Voyager was the flow of the app. It is. I'm not going to talk past tense yet. It is so simple to use. It's dumbfounding. It's like you could hand it to your grandmother and she would be trading in 5 minutes, all set to go. The thing is that what made it valuable is the way they constructed the UI, the process, the way the customer experience in the UI is. That's what made it valuable. The actual technology and platform is not valuable nowadays. UIs are commoditized. I mean, guys, the three of us have built UIs all day long on multiple platforms. It's not like building a website for $100,000 in 1995. It's how you make that customer experience flow. So from tangible value of the UI, there's not a lot of value to be derived from it. Infrastructure behind that you can't see as far as rails and various other custodial movement measurements. That's a different story. But the app itself.
I'll just throw in one thing too, Alex. The fly in the ointment with two is, I guess Sam was valuing the assets as of a certain date, and like you and I spoke of when Voyager went officially bankrupt. I think it was like July the 4th or something like that. So going forward, that will be interesting to figure out if they not mark to market, but mark to a certain time. If you get a combination and it's 75% of your assets of when, right? Like Nick said, where's this market going to be in 3 months? If this is settled in 3 months, if it's 6 months, if it's next week. So that really is the $64,000 question. You're going to get a percentage of X based on when is that timestamp. So we'll know more. I think it's next Thursday. I think the bankruptcy proceedings, I think it's August the 4th. We get more news. So.
We will. And that's also why I didn't bear any credence to Sam Friedman, SBF's, I can't even say his name anymore, to SBF's offers, because it was purposely encapsulated in a time period that cut off any other options. It was almost like a threat mechanism, right? You do it now for me, boom, before you look at anything else, or, screw you. So that was kind of a opportunistic dick move on its own. Apologies for my language. I'm just learning French.
I think we're at the lows on NASDAQ.
Are we?
Yeah, down 239. And we got what today after the close, Nick? We got Mr. Softy and Alphabet.
Mr. Softy.
Mr. Softy.
We've got Alphabet, Microsoft, and Visa after the close. Chipotle as well, which is for some reason a market darling. I don't really know what the obsession is. But yeah, Alphabet, Microsoft, and Visa. I think Alphabet's the biggest one. If Google is telling you to watch out, I mean, that's literally the internet. So, watch out. But we'll see what they say in probably about 90 minutes, 80, 90 minutes.
All right, cool.
So,
hold on to your handlebar.
Seriously, hold on to your handlebars. Prices are moving down. Volume is moving down. There is a clear risk-off trend happening. Now, that money can come back in at any time. It can. But think about this is a game of war. If you are trying to beat your opponent in the submission, likely you add more pain to them. And I think we're near that. So
I did forget to bring this up. Someone just reminded me in the comments, Chipotle, the buy the dip monthly promo. Did anybody see the buy the dip thing they're doing? It was in Times Square too.
Well, we're talking about speaking of Doug asking when the downturn came, it was around when they started that marketing campaign.
That's true.
I'm not lying. So
also quick note, our condolences to a certain American favorite dessert. Doug, tell us what
Choco
we lost
Taco
today.
from
Choco
Choco Taco. It's gone.
It was
40 years
today. Yep, 40 years old, discontinued, no more Choco Taco. So our condolences to everybody who just absolutely loved them. I'm gonna hop in. If any of you guys are holding spaces, I'm gonna be on Twitter later this afternoon. I'm gonna be hopping into a bunch of these VGX spaces just to listen. I like to listen to what everybody has to say. And again, if Obi's in any of those, definitely hop in there.
Hit me up. I'll yell about Coinbase if we need it. If we need someone to yell at clouds, I'll yell at clouds if we need it. Also, hold on, Alex, show my screen real quick. The people need to see this. Is it up? I can't. Look at this.
There you go.
Look at this. Look at this divergence. Which direction is this going in? I mean, come on. Spot is selling off while perps are buying. Which one are you going to trust? The one betting on the actual asset or the actual asset itself? You know, so this is rare form for the market. I want people to see this because we may experience things like this again, and every second, every moment is a learning experience. You know, I'll go tell myself, I'll go, you know, F myself if I am incorrect here, but this is not good. So it was worth. Did you share my screen, Alex? Our faces.
I did. Everybody saw it.
Okay, I'm sorry.
Just brought it back. Yeah, no,
It's just crazy. I mean, literally, spot is selling off, and perps are moving higher in terms of predicted price action.
Yep. No, I still got my in the money shorts on Ethereum BTC Open. Definitely seeing what's happening with earnings after the market today in about 1 hour and 5 minutes. That being said, I don't want to take up everybody's time. Thank you guys for stopping by. Appreciate it. It's always good. I'll be in the spaces later. I want to listen to the smart people talk about what's going on with Voyager and some of the other topics at hand. So hang on to your handlebars. We'll be back tomorrow. Thank you very much, folks. Appreciate it.